The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, Assalamualaikum, good evening and welcome to the day 3 session of AFM webinar, Practice to Pass session. Hopefully guys you have enjoyed and learned something from the last 2 days of webinar. Today we will discuss a very important topic, a very technical topic actually, that is corporate restructuring. So we are going to discuss knowledge checklist, that what are the topics which can be tested in corporate restructuring, what are the different areas of corporate restructuring. Then we will discuss the common examples, the common requirements, what different requirements can be tested from this area. Then we will discuss the common mistakes of the students, that which are the common mistakes which students usually do in the exam. And then simple question and how to score the maximum marks. Obviously, we will solve the simple question on the practice platform on the Excel, and we will also discuss how to score the maximum marks. So let's discuss a very important thing, the knowledge checklist. Corporate restructuring includes capital restructuring and portfolio restructuring. It actually has two parts, the capital restructuring and the portfolio restructuring. In portfolio restructuring, there are different parts, that is divestment, spin-off, carve-out, and management buyout. Examiner often tests capital restructuring in the question, and it is being tested in different ways. So I will discuss those all the ways. So mainly corporate restructuring is divided into two parts, capital restructuring and the portfolio restructuring. And the portfolio restructuring have different parts, divestment, sell-off, spin-off, carve-out, and management buyout. So let's discuss the portfolio restructuring firstly. Then we will discuss the main topic, the core topic, that is capital restructuring. In portfolio restructuring, first is divestment and sell-off. Although you guys may not be expecting that this area can be tested in such a way, it can be tested in WAC. It can be tested in a WAC. If you are selling a part of company, so examiner can ask to calculate WAC of remaining business. Guys, in yesterday class, remember there was a word use spin-off and word use demerger, sell-off. When you are selling the coffee business, if you remember the last class discussion, when you are selling the coffee business, so the remaining business will be, when you are selling the coffee business, so that means you are unbundling the business. So there's a requirement to calculate the WAC of remaining business. So guys, in divestment and sell-off, WAC area can be tested. Although many of the students are thinking that WACC can only be tested in merger and acquisition or in investment appraisal, but seriously, WACC can be tested in corporate restructuring. When you unbundle the business, these are the examples of unbundling. These are the examples of unbundling. When you are selling a business, when you are demerging a business, when you are spinning off the business, there can be a requirement of WACC. So guys, WACC can be tested here. A question can be tested in which you are selling one part of business and you have to calculate the WACC of the other part of the business. So this area can be tested in exam, and this area can be tested with the involvement of merger, and this area can also be tested with the involvement of investment appraisal. But be ready, WACC question can be tested from this area. Then a simple theoretical question can be tested. To examiner can ask to define what is divestment, sell off, spin off, and carve out. So simple theory can be tested. From management buyout, examiner can ask the benefits of buyout, from the perspective of management, from the perspective of seller, the company. So in many past papers, like if I remember the name of the question, there was a question on buyout. The name was Proteus Co. In Proteus Co, A part from the benefits of buyout. So you have to remember the simple theory. It's very simple theory. So simple theory can be tested from the buyout part. So guys, kindly revise divestment, spin-off, carve-out, buyout theory, the advantage and disadvantage of buyout, so that if there is any question, if there is any simple question on theory, you can easily tackle that part. So that is portfolio restructuring. So now let's discuss the capital restructuring. How capital restructuring can be tested? How capital restructuring can be tested? There can be a traditional question. A traditional question. Traditional question will be tested like, first of all, you will have to make a liquidation statement. There will be a scenario in question that company is going to bankrupt. Scenario will be company is going to bankrupt. So, and you have been asked to restructure the company. So what are the different steps of restructuring here? So let's discuss the steps of restructuring. Number one step will be, you will make liquidation statement. You will make a liquidation statement. You will judge that how much each party will get if company goes into liquidation. Okay, now second step will be, you will assume that company is not going to liquidate. In case of restructuring, you will assume that you are going to do the restructuring. You will forecast new balance sheet. You will forecast new income statement. And maybe there is a question to calculate new market value. And in third step, you have to discuss the position of each party, whether each party is beneficial under restructuring or under liquidation. Whether each party is beneficial under restructuring or liquidation. So these steps are very important. So maybe in exam there will be a question that there is a company that previously it was a very wonderful company was performing very well, but currently in recent years company is not performing, company is facing problems. So you have been invited as a consultant, and examiner will ask you that this restructuring proposals are given, solve the question and discuss whether we should do the restructuring or not. So whenever there is a question on the restructuring, if there is a general question on the restructuring, what you will do? You will make a liquidation statement and you will define that if company goes into liquidation, what each party will get. Obviously, the bondholder will get the maximum share, the preference shareholder and the ordinary shareholders will receive nothing or will receive the minimum amount. So then you will read the restructuring proposal. In step number 2, you will read the restructuring proposal, and according to the restructuring proposal, different data will be given. You will make the new income statement, new balance sheet, and new market value. And then in the third part, you will discuss the position of each party, whether the bondholder is happy with the liquidation or with the restructuring, whether the shareholder is happy with the liquidation or with the restructuring, whether the preference shareholder is happy with the liquidation or the restructuring. And probably this part will be tested in report. So in exam, different question has been tested on this area. There is a very old question named as Doric company that was tested typically on this scenario. There is another question, if I correctly recall the name, Flufford or Fluffdot company. I think it was 2015 question. So it was typically tested in this way. So guys, the important part is you have to forecast the balance sheet, income statement, and you have to calculate the new market value. So if you are able to calculate the new market value, income statement, balance sheet, then you have to discuss the position of each party, the existing position and the new position. So let me discuss how to forecast. There can be two scenarios. There can be two cases in exam. Case number 1. Examiner will say that you are going to restructure the company now. Restructure the company now and make statement of financial position now. Statement of financial position now. So you have to make an immediate statement of financial position. Immediate statement of financial position. So you will firstly make statement of financial position and then you will forecast EPS and income statement. So you have to look on the wording of the question. If examiner is requiring that make the balance sheet immediately, if examiner is requiring that make the balance sheet immediately, then you will firstly make the balance sheet, then you will make the income statement. So guys, there can be the two cases. First case, restructure the company now and make the immediate balance sheet. Make the immediate balance sheet. Firstly, you will make the balance sheet, then you will forecast the income statement. So in that balance sheet, you will adjust assets, liabilities, and equity by the given transactions. But you will not add any retained earning, you will not add any depreciation, you will not add anything in the current assets or current liability like the future expenses. Like you will not add any new retained earning because you are making the balance sheet now, immediate balance sheet now. You will not add any new retained earning. Okay, you will not add any depreciation. Add means you will not deduct any depreciation. You will not record any interest in liabilities. So first step is to make the statement of financial position. Second step is to forecast the EPS. Okay, that is case number 1. And this will be rarely tested. What is the most common case which will be tested in the exam? Case number 2. Now, this is going to be very important. Case number 2. What is case number 2, guys? This is important. Step number 1. First of all, firstly, forecast EPS in income statement. Firstly, forecast EPS. Sir, why we are forecasting the EPS here now? Firstly, because in case number 2, let me correct this. In case number 2, examiner will ask you 2 things. That is, make forecast EPS and forecast balance sheet. Make forecast EPS and forecast balance sheet. So guys, this is different. This is different from the above part. Wherein above, you have to make statement of financial position now and forecast EPS. So just go through the question, read the technical word, just identify whether you have to make the forecasted balance sheet or whether you have to make the balance sheet now. If you have to make the balance sheet now, then firstly make the balance sheet, then forecast the EPS. But if there is a requirement to forecast the balance sheet and forecast the EPS, then obviously accounting will prevail then you will firstly calculate firstly calculate forecasted EPS. Okay. Then you will make the balance sheet. Then secondly, you will calculate the forecasted balance sheet. So these are the only two cases which can be tested in income statement or balance sheet and exam. And remember, most common case is case number 2. This is the most common case. Guys, did you get the difference between case number 1 and 2? You got the difference, right? What is the difference between case number 1 and 2? Perfect. Now, let's more elaborate the case number 2. Let's more elaborate. Case number 2. Case 2. Forecast EPS. So what you have to do in the forecasted EPS? How to calculate the forecasted EPS? Guys, whenever there is a question to calculate EPS or to make an income statement in AFM, whenever there is a question that forecast the income statement, guys, do not worry. Previous year income statement will be given. Take the reference of previous year income statement and forecast every item and calculate the next result. Like last year data will be given: sales, cost of sale, gross profit, operating expenses, net profit or operating profit, interest, PBT, tax, profit after tax. What you will do? This is the forecast result. Forecast the sales, forecast the cost, forecast the operating profit, forecast the interest, and obviously apply the tax. So it's very easy to calculate forecasted profit. Okay. There is another case, that is forecasted EPS will be given. You have to adjust it with few adjustments. Next year EPS will be given. You have to do the adjustments. For example, next year earnings are given 100 million. Let's say next year earnings are given 100 million. So maybe 2 to 3 adjustments will be given. Listen carefully. 2 to 3 adjustments will be given. For example, in case of increase in debt, interest will increase. Obviously, earnings will fall. In case of increase in non-current asset, income will increase, earning will increase. Maybe there is an adjustment, increase in current asset. If current assets are increasing, income will increase and earning will increase. And you have to calculate the revised earnings. divide with the number of shares to calculate revised EPS. Similarly, balance sheet can be tested in two ways. That is, last year balance sheet will be given and you have to make a new balance sheet. So what you will do, you will write the last year data, non-current asset, current assets, equity, non-current liability, current liability, and adjust it every item to calculate the new balance sheet. New balance sheet. And if there is some problem of balancing the balance sheet, there are two items which you can write as a balancing figure to balance the balance sheet. One item will be the cash and other item will be the retained earning. So guys, try to balance the balance sheet. Normally you will be able to balance the balance sheet, but in some of the questions, if cash data is limited, put the cash as a balancing figure. If cash data is given, then you will take the retained earning as a adjusting factor, as a balancing factor. So last year balance sheet will be given, you can calculate the new balance sheet. Another case, this is case number, another case which can be tested in exam. Forecasted balance sheet is already given. Forecasted balance sheet is already given. You only have to adjust something. You only have to adjust the data. So let me guys explain here. Let me explain it in detail. Look, there will be two cases of balance sheet will be given. First of all, in restructuring, first case will be, examiner will say, make balance sheet or statement of financial position just after the restructuring. Just after the restructuring. Okay, what you will do? You will write the old balance sheet. Here you will write the new balance sheet. And you will adjust each item line by line. Non-current asset, current assets. Obviously, you will add the addition. You will do the plus minus. Add the addition, less the deletion, current asset, non-current assets, equity, non-current liability, current liability. You will not make any balance sheet. You will not make any income statement first. Firstly, make the balance sheet and adjust every item. This is case number one. It's very important, case number one. Okay. By the way, retained earning will remain same. No change here. Because retained earning is linked with the time. So if there is no change in time, retained earning will be same. Second, forecast the EPS or income statement. It's very easy. Previous year income statement will be given, or previous earnings will be given. Previous forecasted earnings will be given. you will adjust it. For example, 100 million is given, you will adjust it. If interest is increasing, it will be deducted. If non-current asset is increasing, it will increase the income. It will increase. If current assets are increasing, income will increase. Income will increase. It will increase. So you have to calculate the revised earning. You have to calculate the revised earnings. So guys, case number 1 is existing balance sheet is given and you have to calculate the new balances just after the restructuring. This is case number 1. Okay, what about the case number 2? Case 2. In case 2, what you have to do, calculate forecasted EPS and forecasted balance sheet. So first you will forecast the EPS, forecast EPS. Secondly, then you will make forecasted balance sheet including forecasted EPS. Because we know, as an accountant, we know that whenever there is a requirement to make balance sheet and income statement of next year, we will always make income statement first, then we will make the balance sheet. So that's why case number 2 is different from the case number 1. Okay, that's why case number 2 is different from the case number 1. So you have to identify in the exam. So normally what examiner will do, examiner will give you few adjustment. Few adjustments will be given. And you have to adjust already given forecasted earnings and forecasted balance sheet. So you have to adjust already given forecasted earning and forecasted balance sheet. Like I have already explained, forecasted earnings are given. For example, 100 million. Increase in debt will increase the interest and earning will decrease. Increase in non-current asset, income will increase, forecasted earning will increase. Increase in current assets, income will increase, earning will increase. So similarly, when you are making the balance sheet, this revised earning will go to the retained earning. This increase in debt has a second impact on the current liability. This increase interest impact has impact on the current liability. And similarly, when the income is increasing here, it has an impact on the current asset. Because we know if income is increasing, it has two impact. One, the earning will increase. Second, the receivable or cash will increase. Similarly, if the expense is increasing, we know it's two impact. One, the earning has down. Second, current liability has increased. So guys, you have to do the practice on this. There is a question which is a very helpful question. You can have a practice on this question. In your company, it's a past exam paper question. You can solve this question. It will help you. There is a question named in your company, especially tested on this area. If you able to solve this question, many of your problem will be solved. Okay. There are other questions. Chrysosco, and there is a question name. Let me EVU Cinemas. Konejoko. So if you able to solve the Inyako, you can solve these adjustments in Konejoko. It's very similar with each other. Okay. Guys, if non-current assets, there is a question that can you shed some light on the factors that increases the earning in case of non-current asset and current assets? Look, if non-current assets are increasing, there will be a statement given in the question. There will be a statement given in the question that if non-current assets are increasing, it will increase the earnings. So you will take the increase in non-current asset and multiply the appropriate percentage which will be given that how much earning will increase. No detail. Normally depreciation will not be tested. Depreciation detail will not be given. It's not like SBR exam. So only income or expenses detail will be given. Depreciation information should be given, but normally it is not. It will not be given in AFM exam, but practically it will be given. Maybe because of it's non-cash, that's why it is not given. But by the way, the earning impact or the expense impact will be given. Okay. If you have missed first 2 days, the recording will be uploaded soon. Don't worry about that. So guys, I have seen many of the students struggling with this part. So let's discuss some common requirements. Look, I have copied these requirements from the past exam papers. Advantage and disadvantage of demerging the sports fair. So it's a simple question about the advantage and disadvantage of demerger. So you can expect simple theory from restructuring. So here's the question: calculate the expected sale price of EV Club. So this belongs to merger area. You have to calculate the present value of future cash flow. Then impact on the EVU Cinemas Company statement of financial position, forecast EPS, and weighted average cost of capital. So guys, here the question is to calculate the impact on the EVU Cinemas Company statement of financial position, forecast EPS, and weighted average cost of capital. So it's a question of restructuring, but examiner is asking you to calculate even WACC. So you can expect the WACC question here. Okay. So by the way, which area has been tested here? Case number 1 has been tested or case number 2 has been tested? Please tell me. Read this requirement and tell me which case has been tested here. Case number one. Case number one has been tested. So firstly, you will make balance sheet or income statement. Firstly, you will make the balance sheet, then you will make the income statement. Now, your question should be, sir, how you have identified this? It's very simple. Before EPS, forecast word is given. Before statement of financial position, nothing like forecast has given. So that means balance sheet, examiner is asking to make balance sheet immediately. And examiner has asked you to calculate EPS after 1 year. And remember one thing, examiner can never ask to calculate earnings immediately. Examiner will never ask to calculate earning just after the restructuring. Why? Because earning is linked with time. Income or earning is linked with time. Remember, whenever we make the balance sheet, it is as at. Whenever we are making an income statement, it is for the year, for the period. So EPS, income statement, will always be asked for after 1 year, but balance sheet can be asked immediately or after 1 year. Okay, next, which case has been tested? Which case has been tested here? Please tell me. An extract of the financial position and estimate of the crisis company value to equity holder after undertaking the restructuring. No. Case number one. Nothing about the forecast. Case number one. Next, easy theory has been tested, the difference between management buyout and buy-in. Okay, now this is important. Please read this and identify which case has been tested. Forecast earning, forecast financial position. Okay, this is case number two. This is case number two. So some of the students were asking, sir, how we would know that which case has been tested? Guys, you can identify it from the requirement. It's not that difficult. It's very easy. You can identify from the requirement. I will send the scratch pad and these annotated notes in the WhatsApp group. Don't worry about this. I will send it. There is no need to take the screenshot. I will send all these notes just after the class. So guys, these are the common mistakes which I have identified whenever I check the whenever I check the candidates' questions or answers. Inability to identify a statement of financial position, whether it will be a current statement of financial position or forecast statement of financial position. So we have done the enough discussion to identify this. Inability to make forecast profit and loss account. I don't know why students always face difficulty in forecasting profit and loss account. Seriously, whenever there is a question about the forecasting of income statement, identify last year income statement and then forecast it to the next year. If full income statement is given, adjust every line item to calculate the next year income statement. And if only earning is given, then just make the adjustments in that earnings and calculate the forecasted earnings. So you should be able to make the forecasted profit and loss account. Next is inability to balance statement of financial position. Inability to balance statement of financial position. Guys, normally whenever you make a balance sheet, almost in 90% of the question, balance sheet will be balanced. Why? Examiner will give you the detail of non-current assets, current assets, equity, non-current liability and current liability. If you unable to balance the statement of financial position, there are 2 points which can be taken as a balancing figure. Either cash or retainer. If cash full information is given, you can take the retained earning as a balancing figure. If retained earning full information is given, you can take the cash as a balancing figure. But believe me, in 90% question, all the information will be given. So, lesser chance that you will find it difficult to balance the balance sheet. Students often lack skills to read a financial statement. You have to do the practice of few questions. Student often lack skills of discursive knowledge. So for these, I will ask you to solve few questions, especially in this restructuring part. Inia company, Canejo, Chrysos, and EVO Cinemas. Almost all of these questions are available on my YouTube channel. Still, if you find some difficulty, you can ask these questions or the adjustment of these questions in the WhatsApp group. Okay, there's a question. I think the interaction of the transaction on both balance sheet and income statement can be different. That is confusing. In balance sheet, you have to consider the prior transaction, whereas income statement can start fresh. Obviously, that's why I have differentiated into 2 cases. If you are making balance sheet just after the restructuring, you have to just add or less the adjustments of restructuring. And if you are making the balance sheet of next year, then you have to adjust all the transactions which will incur in that particular year. For example, if interest has increased, for example, if the debt has increased, you have to add the interest part of interest on that debt in the current liability. If, for example, the non-current asset has increased, you have to add the income which you have earned on the non-current asset in the current assets. So that's why I have differentiated into 2 cases. Okay, now we will discuss what is required to score the maximum marks. Obviously, thorough understanding of the topic knowledge. Try to make statement of financial position by working on the existing statement of financial position. Adjust each item of statement of financial position and make new statement of financial position. Guys, whenever there is a question to make a balance sheet, your reference should be the old balance sheet, the existing balance sheet. Adjust every item and make the new balance sheet. Remember, by nature, you are accountant. You can make the balance sheet and income statement. Solve like a perfect person, like a perfect accountant. Accountant can never wrongly calculate the balance sheet or income statement. So you should have a full confidence on yourself whenever there's a question of statement of financial position or income statement. Whenever there's a requirement to make new income statement or statement of financial position, remember there will always be 2 impact on the statement financial position to balance the balance sheet. There will be on the 2 impact on the balance sheet. If you have, for example, an increase in interest, it has 2 impact. One impact is in earning and the other impact is current liability. Increase in income. Increase in income has 2 impact. One in the earning, one in the current assets. So if you are taking the one impact, balance sheet will never be balanced. Every adjustment has 2 impact. It is a simple double entry rule. Try to make a new income statement by redrafting current income statement. Adjust each item of income statement to forecast new income statement. Remaining points are simple. Show all calculation because every calculation shows some marks. If you are unable to recall any step, take assumption and move to the next part. Whenever you solve the calculation, always discuss the result of calculation. And here in restructuring, discussion point of view is simple. What is? How will you do the discussion in restructuring? You will compare the positions of stakeholder. What position? Before restructuring and after restructuring. Guys, whenever there is a requirement in exam about the restructuring question, when you solve the numerical, now examiner will ask you to discuss the position of shareholder, the bondholder, the management. Remember, the rule is very simple. You have to discuss their existing position with a new position. If their new position is better, restructuring is successful. If the new position is not better, restructuring will not be successful. That's it. That's a simple rule of discussion here in restructuring question. It's a very simple rule. Read theoretical answer of examiner to learn expression, solve maximum past paper for practice, but do expect different scenarios in your exam. So guys, let's solve recent past paper exam question. Please open the recent past exam paper question, September, December 2021. September, December 2021. Yes, when I say the comparison can be between the existing EPS and the new EPS. Existing gearing, new gearing. Existing ownership or the control, the new control. For example, for discussion, let me, guys, give me 2 minutes. Let me discuss one more thing. Discussion. For example, you are discussing about the debt holder. So you have to discuss their existing position with the new position. Obviously, what debt holder will see in the company, your profitability should increase. Your gearing should decrease. Gearing means risk. Your interest cover should increase. You will compare their existing position with a new position. Maybe you have given some shares to the debt holder. So they will get some ownership right. They get some solid fixed charge security. So if you give the fixed charge security to the bondholder, if profitability is increasing, if gearing is reducing and trust cover is increasing, obviously bondholder will be convinced. Bondholder will be convinced for the restructuring. What about the shareholder? Shareholder will be ready for the restructuring if company is surviving, if company is profitable. If company EPS is increasing, yes, they can compromise on the control. But if company is surviving, they will ready for the restructuring. Why is it so? Because if you do not do the restructuring, company will go bankrupt. Company will go bankrupt. So it is better that company is surviving compared to the bankruptcy. So guys, comparison is simple. You have to compare the existing position with the new position. But obviously discussion is different from the perspective of debt holder. Discussion is different from the perspective of shareholder, even the management. And obviously, one last thing, one of the students has also asked, after comparing the situation of every stakeholder, you have to give the conclusion. Conclusion is necessary because examiner will normally ask this question in a report format. You have to give the conclusion that whether the restructuring is more successful or the previous scenario was more successful. You have to give the conclusion. Obviously, there may be a case that you will say that every party will be convinced except this party, otherwise restructuring will be successful. For example, everybody is convinced except one party. So you will write that restructuring proposal is reasonable, restructuring proposal is overall acceptable, except this party. So management has to revise the restructuring proposal for that party so that that party can be convinced and overall restructuring will be then successful. You can write in this way. Okay. So please open this question, September, December 2021. Question number 3. Question number 3. Please read the requirements. Please open this and start reading the requirements. First requirement is calculate the expected sale price of children shoes division. Calculate the expected sale price of children shoes division. Guys, don't be confused with the requirement. Sale price of division is not like the sales revenue. Sales price of division means you have to calculate the market value of this division. And whenever there is a question on the market value, it is very easy. You will be applying the market valuation method. So calculate the expected sale price of shoes division. So this part is you have to calculate the market value of shoe division and demonstrate its impact on Handwood Shoes statement of financial position and forecast EPS. Okay. Please tell me which case has been tested. Read the first requirement and please tell me which case has been tested. Case number 1 or case number 2. So let me explain in different way. You have to forecast the EPS, that is okay. You have to make the balance sheet now or you have to forecast the balance sheet. Balance sheet now or forecast. Now, it's not forecast. Guys, word forecast is not given. Demonstrate its impact. Calculate the sale price of shoe division. That means calculate the market value of shoe division and demonstrate its impact on Handwood Shoes statement of financial position. If you are selling the shoe division, what will be the impact on the balance sheet? If you are selling the division, what will be the impact on the balance sheet? You have to make the balance sheet now. And then it is written forecast EPS. So it is case number one, guys. Case number one. You have to make the balance sheet now and forecast EPS. Forecast EPS is constant. In both cases, you have to forecast the EPS. But here, you have to make the balance sheet now. And what will be the impact on the balance sheet? This impact. If you sell the division, what will be the impact on the balance sheet? If you sell the division, what will be the impact on the balance sheet? Impact can be non-current asset can decrease, current asset can decrease, liability can decrease because you are selling your division. So asset and liabilities both can decrease. Okay, B part. Discuss whether Hanwood Shoes investors are likely to be satisfied with the proposed sale of Children's Shoe division and its consequence for profit and funding. Discuss whether Hanwood Shoes investors are likely to be satisfied with the proposed sale of shoe division. So you have to discuss on that shoe division and its consequence for profit and funding. This question is quite similar with one past paper question named as EVO cinemas. This question is similar to the EVO cinema. Even the theory is very similar to the EVO cinemas. The last part, discuss the implication for future profit and liquidity of the alternative suggestion made by the non-executive director. So it depends which suggestion non-executive directors has made. Okay, let's read the scenario one by one. Hanwood Shoes started trading 40 years ago. We will discuss part B. Let me read the scenario. We will discuss all the parts. Hanwood Shoes Company started trading 40 years ago. So it's a very old company, 40 years old company. Manufacturing and selling children's shoes in shops. So you are selling children's shoes in shops. Shops have been of higher quality than shoes produced by its competitors, although also made expensive. School shoe sale in particular have been a consistent larger generator of cash, helping to fund the company expansion. So this is very important. So school shoe is a very stable cash flow generating division. About 15 years ago, Hanwood Shoes Company started manufacturing and selling adult shoes. Hanwood Shoes adult shoes are currently sold at a higher profit margin than the children's shoes. So the profit margin of adults have increased compared to the children. Adult shoe sales now generate the majority of Hanwood Shoes profit. So your majority profits are driven from the adult shoes. The adult shoes sold are a mixture of formal types with a long lifespan and some fashionable shoes. The inventory turnover period for adult shoes is on average significantly higher than for the children's shoes. What is the meaning of this? What is the meaning of this, guys? Anyone? Inventory turnover is high. That mean inventory turnover period for adult shoes is on average significantly higher. So that means inventory turnover period means how much time you are taking to convert the inventory into sales. How much time you are taking to convert the inventory into sales. So if inventory turnover period is high, so that means you are taking longer time to convert the inventory into cost of sale or sale. So guys, what if inventory turnover period is high? What is the problem? If inventory turnover period is high, remember it's not inventory turnover period. The word period is important here. If inventory turnover period is high, then what is the problem? Our cash will be stuck. We can face liquidity problem. Remember in last requirement, there was a question about the liquidity. In last part, there is a question about the liquidity. So this will help us in discussion of the last part. So we are focusing on the adult business, but adult business cash operating cycle is longer. In adult business, we will be facing the problem of inventory. So guys, children shoe, in comparison with the children shoe, adult shoe business is taking longer period to convert the inventory into sales. Working capital will be longer. Excellent. Handwood Shoes Company is organized on the basis of two separate divisions for children and adults. Its shops sell either children's shoes or adult shoes, but not both. Handwood Shoes Company also sells adult shoes to other retailers. 5 years ago, Handwood Shoes Company restructured its cost base. It moved production of children's shoes to new facilities in its home country and outsourced the production of adult shoes to the foreign suppliers. However, Handwood Shoes Board now predicts that profit from children's shoes will increase at a slower rate than adult shoes. It expects that in the next few years, a greater share of the children's shoe market will be taken by the companies with a lower cost base. So just apply your business knowledge here. There's a threat here, competitor's threat, right? Low cost entry. New entrants can enter and your business will be affected, especially the children shoe business. Handwood Shoe Company board is aware that it must convince investors that any major strategic change it makes will result in an increase in earning per share. Investor will also consider a change in earning per share against any change in the business profile of the company. So if EPS is increasing, investor can be convinced that we should sell the children shoe business. So it is written here, if EPS is increasing, investor will be convinced. Next. Handwood Shoes Company board wishes to improve the company cash position for two reasons. Number one, first loan of 175 million are due to be redeemed in just 1 year time. So you will have to pay back this loan. The board is unwilling to seek renewed loan funding because the term would not be favorable and some investors have expressed concern about gearing level. Second, Handwood Shoes Company has recently been slow to pay some of its suppliers of adult shoes. One major supplier recently delayed delivery of shoes to the Handwood Shoes Company until it was paid for previous deliveries. So your gearing is increasing and your company is also facing liquidity issues. You are unable to pay your supplier recently. Handwood Shoes Company CEO proposed that the company should in future only sell adult shoes and should sell the children's shoes division. He believed from industry contact that at least 3 children clothing manufacturers looking to expand their product range would be interested. So CEO is telling you that we should sell the children division and 3 clothing manufacturers will be ready to take this business. Finance director suggested that proceed from the sale of division could be used to pay off the loan. It would then be used to increase cash held and improve liquidity. Remaining proceed would be invested in adult shoe division to improve the earning per share. So guys, these 3 lines are very important. So the finance director is saying we should sell the division and pay back the loan, this 175 million loan notes. Then we should increase the cash held, that means current asset, and remaining proceed will be invested in the divisions to improve the EPS. A non-executive director asked why liquidity needed to be improved. why there is a need to improve the liquidity. So this is relevant to the third part. He claimed that higher profit could be achieved by investing funds not required to pay loan notes in non-current assets. He thought that Henwood Shoes Company should maintain the same level of current asset as it has now. So this director is saying that why liquidity needed to be improved. He claimed that higher profit could be achieved by investing funds not required to pay the loan notes in current assets. Higher profit could be achieved by investing funds not required to pay the loan notes in current assets. So he's saying that invest all the funds in the non-current assets, you can increase the profit. And he's also saying that company should maintain the current assets. Okay. No, he's not saying to default. He's saying why there is a need to improve the liquidity. Current assets should remain same. We should invest all the amount in the non-current assets after paying the loan notes. Higher profit could be achieved by investing funds not required to repay the loan. Obviously, after paying the loan, there will be some amount which will be left. Invest that amount in the non-current asset. The second last is sale price of the children's shoes division will be the sum of the present value of the predicted future cash flow. Discount rate is 10%. So examiner is very kind. Method is very simple. Predicted after-tax free cash flows are given. Predicted after-tax profit of the children's shoe division in year 1 is 76 million. Total after-tax profit for the Henwood Shoes Company for year 1, if the children's shoe division is not sold, is 217 million. After year 4, free cash flow for the children's shoe division should be assumed to increase at a rate of 3.5%. These lines are very important. The proceed received for selling the shoe division would be used first to pay back the 9% loans. Okay. Part of the remaining amount from the sale proceed will be held as a part of current assets so that current ratio increase to 1.4. Okay. The rest of the sale proceed will be invested in non-current assets. So this paragraph, this bullet line is very, very important. This will help us in balance sheet. The profit on the sale of the children's shoe division should be taken directly to the reserves. Non-current asset of the children's shoe division can be assumed to be 608 million. The current asset is assumed to be 349 million. Additional investment in non-current asset is expected to earn 18%, and additional investment in current asset is expected to earn 6%. By the way, the executive director was right. The return on non-current asset is 18%, but return on the current asset is 6%. So where we should invest? In the non-current asset or current assets? Where we should invest? In the non-current asset. Okay. Okay, the tax is payable at a 20%, and the last exhibit is okay, balance sheet is given. Can we copy? No, we can't copy this. Can we copy? Okay, perfect. This can be copied. This can be copied. We will copy it, but I was just checking that whether it can be copied or not. So let's solve this question one by one. First requirement. Calculate the sorry, calculate the expected sale price of the children shoe division. So first of all, let's calculate the expected sale price of children shoe division. Part A. Part A. Sale price of children shoe division. Okay. Now, data was given. After tax free cash flows are given 76, 81, 85. One, two, three, 4, 5 onwards. Free cash flows. Free cash flows. So cash flows are given 76, 81, 85. 76, 81, 85, 88. Okay. Discount factor is 12%, 10%. And the growth is 3.5%. Ten percent, 1.1 raised to power minus 88 into 1.035 divided by bracket start 0.1 minus 0.035. Present value sale proceed one two one seven. Uh, what remember I copied some data from the question here, so that's why row number 4 is automatically merged. I didn't merge it. So that was the question number, first part of the first requirement. So we have done with this requirement. Now what to do? Now we have to make the statement of financial position. Okay, now let's copy from here. I think we can't merge the cells. Look, in the question it is already merged. That's why. Let me copy. So this is the previous balance sheet. Now we have to calculate the new balance sheet. New statement of financial position. And we will do the adjustment here. Okay. Now let's read the question and do the adjustment. Okay, there is a question that how we calculate the growth in year 5. Growth in year 5 is given. It was given in the question. Growth is 3.5%. It is given. It was given in the question. Okay, guys. Now let's calculate. Obviously, the sale proceed which you have get here, where you will write this, the sale proceed 1217. This is an addition in cash, right? So current asset will increase 1217. You will be paying back this loan 175, right? And your cash will be decrease. This is one adjustment. What are the other adjustment? Okay, you will pay back the loan. Next is part of the remaining amount from the sale proceed will be held as part of the current asset, so that current ratio increase to 1.4. Increase the current ratio to 1.4. So guys, what is the current ratio by the way? What is the current ratio? Current ratio. Current ratio currently. $909 over current liability. Current ratio is 1.01 approximately. We have to increase it to 1.4. So nothing has given about the current liability. So that means current liability will remain same, 894. We have to increase the current assets. New current ratio will be 1.4, and new current assets will be 894 into 1.4, 1251.6. Okay, as we have sold the division, so we have to remove this 608 and 349. 608 and 349. So remove 608 and minus the 349. You can write it separately, even 349. Okay, as you are selling the division, sale proceed is 1217. So what is the gain on selling the division? What is the gain? Non-current assets, division assets are 608 are the non-current assets, 349 are the current assets. 608 plus 349, 957. So what is the gain on disposal? 260. 260 is the gain. You will add this 260 in the retained earning reserves, because it is written in the question that you will add this into the reserves. Okay, now identify the difference. That what is the difference here? You have to move to 1251. How much you have available here? 1042 minus 349, 692, right? Plus 909 minus 1252. So what I have to put here, so that answer will be equal to 1251. Guys, what should I write here so that answer comes here as 12, because I know the final answer. 1251 is the final answer. 1251 is the final answer. I know this. 909 was the previous position. By 349, my cash flow should decrease. By 1042, my cash flow should increase. So I have to calculate the balancing figure here. So how to calculate this? 1251 minus sum of these cash flows. 350. So I will deduct 350 here. What was written? Where should I park this money? If the ratio is 1.4, the rest of the sale proceed will be invested in non-current asset. I should park this in the non-current asset. 350.4. You can even round off the figures, don't worry about that. So guys, what is the total of non-current assets? Sum of all these, 942. So it will be equal to 2194. Share capital will remain same. Add this 0. It will be same. Bank loan will remain same. Current liability will remain same. Two 194. So balance sheet is balanced. Balance sheet is balanced. Okay, there is a question that how I get 350. It's very easy. Remember, first adjustment. What was the first adjustment? You have sold the subsidiary for 1217, right? So don't worry, let me solve all these again. Okay, let's solve all these again. It's very simple. Okay, first of all, calculate the selling proceeds of the division. So in this part, how much we got? 1217. So 127 is the inflow, right? This is the inflow, 1217. You have sold the division for 1217. The divisional assets were 608 and 349. 608 was current asset, non-current asset, and 349 was the non-current assets. Sorry, current assets. So, guys, assets of children's shoe were 957. Sale proceeds were 1217. So your gain is 260. So you have earned gain of 260. And you are paying back this loan 175. So it should be deducted 175. And you should deduct 175 here. Now, as you are selling the children division, you should deduct the non-current assets of children. You should also deduct the current assets of children. 349. Okay. A statement is given here. The receipt for selling the children. I'm reading fifth point. The receipt for selling the children's shoe division would be used first to pay off the loan. So we have done that part. We have paid the loan. Part of the remaining amount from the sale proceed will be held as part of current asset, so that current ratio increases to 1.4. So what is this? You should invest such amount in current assets in such a way that current ratio moves to 1.4. By the way, current liabilities are 894. Multiply the 894 with 1.4. 894 with 1.4. So that means new current assets should be equal to 1251. New current assets will be equal to 1251. So if I take the total of these three, it is more than 1251. So where should I park this total? Where should I park this additional amount? I should park this additional amount to the non-current assets. It is written here. The rest of the sale, reading the fifth bullet point, the last line, the rest of the sale proceed will be invested in non-current asset. So the excess amount will be parked in non-current assets. So if you take the sum of these three, guys, it is equal to 1602. But my answer is 1251. So the difference between these two will be parked to the non-current assets. $350. Okay. So that's how your balance sheet will be balanced. Any question? Okay. Sale proceed is simple. This is sale proceed working. Present value of all future cash flows. That's it. Present value of future cash flow. This is also the part of obviously it's part of examiner will give the marks on this, but this working is okay. There is no need to show that what is this 608, what is 349, what is 350. There is no need to show here, because if you follow the standard solution, examiner can't show that examiner cannot write the description with each item. Time will be limited. So that is okay. Okay, the next is, now you have to calculate the forecast EPS. By the way, forecast EPS is given. You just have to adjust it. So the total after tax profit of Henwood shoes are given to 17. The division which you are selling, its profit was 76 million. 76 million. So let's calculate the impact on earnings. Forecasted profit of Henwood company. $217. What was the profit? 217. And profit of children shoe division. $76. Obviously, you will deduct it. You will deduct it. Now, guys, now identify the adjustment which you have done. What is the adjustment? Anyone? What are the different adjustments here? Decrease in loan. So what was the interest on the loan? 9%. And what was the tax? 20%. So decrease in interest. 175 million was the loan amount. You have saved 9% on that, and its after tax value is 0.8. 12.6 is the income. Your income will increase. Your income will increase. By decreasing the loan, your income will increase. Okay. Now you have done the addition in current non-current asset, that is 350. Addition in non-current asset 350. Addition in non-current asset 350. Okay, 350. What was the return on 350? 18%. Income on new non-current assets. 350.4 into 18% into 0.8. Okay, there is no need to calculate. We have to adjust the impact of children asset. Yes, because we have removed the children asset profit from the total profit. So income on new current assets. So guys, let's calculate the increase in current assets. This is the increase in current assets. You identify 1042. You have your current asset position is 909 minus 349, and you are moving to 1251.6. 692. There will be an increase of 692, approximately 692. You can solve it in the working. Increase in current assets. Previous current asset was previous current asset was 909. 909. Sale of children division. So your current asset has been down by 349. 349, right? So this is the exact position of your current assets. Now the new current assets are 1251.6. Now calculate the increase in current assets. 691 is the increase in current assets. This is the increase in current assets. Okay. Now some of the students are saying, sir, simply take the difference between 1251 and 909. You are right. But there is one problem. In 909, children current assets were also included. You are selling that division. You are also putting that money into the current assets. Look, you are putting some money in the current assets. One is the difference between 1251 and 909. You are right. 342 should be the answer, right? Some of the students are saying that, sir, 342 should be the answer. But guys, you are also putting money for 349. Why? Because you are selling one of your division, so your current assets are decreasing. You are not only putting money for 342, you are also putting money for 349. So when you add 349 and 342, it will be equal to 692. Okay. So that's why increase in current asset is 692. Similarly, if you take the above case, it will be exactly like that. Why you haven't taken the difference between 942 and 1200? If you compare 1200 and 942, your non-current assets are decreasing. But guys, you are selling some division, that's why 608 non-current assets are also removing. So what additional you have invested? 350. Similarly, you can't take the difference between 1251 and 909. Your previous current assets level has decreased. So actually you are investing between the difference between 1251 and 909. You are also investing for 349. So that's why the total increase in current assets are 692. Okay. So 691.6 into 6% into 0.8. So if you take the total earning, it will be equal to 237. 237. So what are the number of shares? Number of shares are given, I think, in the balance sheet. 50 million. Number of shares are 50 million. EPS will be 4.74. previous EPS was 217 divided by 50 million. So EPS has increased from 4.34 to 4.74. Okay, there is a question that gain on disposal will not be taken in the calculation. No. Because it was stated in the question that gain on disposal will be directly taken to the retained earning. It is given in the question. The statement is given in the question that directly take the gain on disposal to the retained earning. So guys, your EPS is increasing from 4.3 to 4.74, 4.75 approximately. Okay. Any question till now? Profit of sale division is 76, please. No, profit of sale division is not 76. Okay, this 76, yes, it is given. The predicted after-tax profit of children shoe division in year 1 can be assumed to be 76. And profit of the whole company was 217 and profit of the children shoe division is 76. Profit of the whole business is 217 and the division which you are selling, its profit was 76 million. It is given. Okay. Guys, let's have a break of few minutes, and after the break we will complete this question. It's B part and C part. Gain on disposal. Although tax on disposal is not given here, but still, if you want to calculate the after tax impact, you can calculate. Nothing will be changed for the EPS. There will be slight adjustment in the balance sheet. Why profit 76 is deducting from the earning? Because 217 includes all the earnings. 217 is the earning of total business without before excluding the children's shoe division. Okay, when you sell that children's shoe division, obviously then 76 should be deducted from 217. Another question, why we are not adding gain on the disposal in income statement? Because it is given in the question that profit on the sale of, point number 6, please read point number 6. Profit on the sale of division should be taken directly to reserves. It's 350 by the way. $350. If we take the difference of these two and 942, the difference will be 350. And here it will be 350.4 into 18% into 0.8. Okay guys, let's have a break. We will be back in at 10:00 p.m. Pakistan time. I will answer this after the break. Don't worry. Welcome back, guys. Okay, now let's discuss its B part. Discuss whether the handbook shoes investors are likely to be satisfied with the proposed sale of children's shoe division and its consequence for profit and funding. So you will discuss that whether this sale, what will be the reaction of investors on this sale, and what will be the consequence for the profit and the funding. So you will discuss in three headings. Part B, reactions of investors on sale of children division. Impact on profit and impact on funding. So reaction of investor. Obviously, you are selling your children's shoe division. So there will be a number of questions which investors can ask from you. One question is why you are selling the established business. It's an old business. Why you are selling? Why need of selling established consistent performer. It's an old business, it's a consistent performer, it's always generate a consistent cash flow. Why there's a need of selling this business? And if you are selling this business, why now? Why you are selling now? Maybe in future we can get the bigger sale proceed. And if you are selling, you should bargain with, remember, 3 clothing manufacturers are also entering in the shoe market. You should bargain with clothing brands for the big price of shoe division. So you have to discuss in this way. And if you're selling, and if first question is why you are selling the established business. Obviously the answer will be in future there will be some problem with the children children division, profit is lower, its margins are lower, and in future there will be a stiff competition. So okay, that's why we are selling. And if you're selling now, why you're selling now? In future, maybe if we sell after 2 to 3 years, we may be able to grow this business and we can fetch the higher price. The answer of this will be, if you are selling after 2 to 3 years, maybe new entrants enter the market and you may lose the share and competitiveness of the business. Okay, if you are selling, you should bargain with the clothing brands and to increase the uh, price of this shoe division. Investor will also ask that if you sell this division, you will lose the diversification benefit. the diversification benefit. Now you will only be doing the adult shoe business. You are no more in children shoe business. So you will lose the diversification business. And if you lose the diversification business, it can increase the cash. So you will write all these into the reaction of investor. So what is the impact on the profit? Impact on the profit is clear. Your earning is increasing from 4.25 to how much? 4.34 to 4.75. It is increase of almost, if I calculate in terms of percentage, it is increase of almost 9%. Increase of 9.33%. So profit is increasing, but it depends. If we able to realize the profit, because you have to comment on the profit. It is obvious that profit is increasing, but you also have to write that it depends whether we able to realize this profit or not. We should also consider the future risk that in future now our business is less diversified. So maybe we unable to achieve this profit. Otherwise, profit is increasing. Profit is increasing by 9.33%. But the question is whether our assumptions of achieving this profit is true, is right or not. Okay. Can we include need for cash to repay loan as a reason to sell? Yes. I missed that. You should write that, because company was in problem. That's why we need that. Okay. Last was you have to show the impact on the funding. Obviously, if we are selling the shoe division, we are able to pay back the loan. We are able to increase our current assets. So we have able to increase our liquidity position, and our gearing position is also increased. So now in future, when our gearing position has increased, our company has become less risky, and we will be able to expand our business in the future. We can be able to expand the adult shoe business. So that's, you will write the likely reaction of investors, the consequence for profit and funding. Marks are 7. Obviously, you have to write according to the marks available. Next is discuss the implication for future profits. Discuss the implication for future profits and liquidity of the alternative suggestion made by non-executive directors. So guys, now identify what non-executive directors have said. Please read the last paragraph. Non-executive director is saying, he claimed that higher profit could be achieved by investing funds not required to repay the loan notes in current assets. So if you invest the excessive funds in the current assets, you can increase your income more. He thought that Henwood Shoes should maintain the same level of current assets. Okay. So guys, if we maintain the same level of current assets, previously current assets were 909. If we maintain it to the 909, what is the difference? 1251, 342, right? If we maintain the current assets at the same level, 342 is the amount. You should invest this 342 into the non-current assets. So how much you will be able to earn? 342 into 18% into 0.8. You will be able to earn 49 million. And how much you are earning now by investing in the current assets? You are earning 6%. You are earning 6%. So how much additional you can earn? 33 million can be additionally earned. 33 million can be additionally earned. What I have done, guys, director, non-executive director is saying you should maintain the current assets level. Previously, current asset was at 909. If we maintain the current asset at still at 909, how much amount we can save? 1251 minus 909. We can invest this 342 amount into the non-current assets. By investing in current assets, you can earn 6%. By investing into the non-current assets, you can earn 18%. So how much additional you can earn here? 12% into 0.8. So you can earn 33 million additional. So guys, you will write that non-executive director is right in his opinion that if we invest the surplus amount in the non-current assets, we can increase our income by 33 million. If we can put all the amount in the non-current assets, by maintaining the current assets, we can earn 33 million more. But obviously, it is a point of discussion that whether there is a need in non-current assets. If there is no need in non-current assets, how can you earn the additional income? If that is the case, everybody will invest all the amount in the non-current asset. Because if non-current assets are high earning yielding, everyone will invest all the data, all the amount, all the funds into the non-current assets. And if you invest all the amount in the non-current assets and nothing investment in the sporting assets, how can you earn? So non-executive director was right that if we invest additional amount in the non-current assets, we can increase the income. But the question is whether there is a need in the non-current assets, whether if we invest the additional amount in non-current assets, the non-current asset will earn the same percentage of return of 18%. And what if we do not increase investment in current assets? How will we be able to support the growth? So you will write that amount. And what you will write in the liquidity, you will write that now the company is shifting from children's shoe business to the adult shoe business. Adult shoe business is facing a problem of high inventory turnover period. Adult shoe business is also facing a problem of late payment to the supplier. So that's a problem that company can face. If company unable to reduce the turnover days, if company unable to pay timely to the supplier, company can face liquidity issues in future too. Although currently company has able to increase the cash level and has able to reduce the debt level, but adult shoe business is in that industry where we are facing the high liquidity turnover period and late payment to the supplier. So company can face liquidity issues in future because now we are shifted into the adult shoe business. You can write that. Okay, obviously company need to apply those policies by which we can reduce the inventory turnover period, by which we can increase our liquidity position. Impact to the liquidity, you will write that previously you are facing liquidity issue because of the adult shoe business. Now you are only in the adult shoe business. You have sold the other business. So that means you will be facing the liquidity issues. So you have to adjust your working capital policies. You have to change your working capital policy so that you cannot face you do not face liquidity issues in the future. You do not face the longer inventory turnover period issues in future. Okay. Yes, question asks, liquidity with respect to non-executive director suggestion. Because the non-executive director is saying company should maintain the same level of current assets, and he's also asking that why liquidity needed to be improved. Why there is a need to improve the liquidity? You have to answer this line. Why there is a need to improve the liquidity? You will write that there should be some ways to improve the liquidity because company is facing the delaying payment to the supplier issue. Company is also facing the longer inventory turnover period issues. Excel sheet. Word. We have to comment on the suggestion. We do not have to give the conclusion. Okay. Okay, guys, now let's solve a question on the BSOP model. This is a question. It's a very old question, but it will give us some enough practice to tackle the BSOP question. Black-Scholes option pricing model. Okay, there is a question regarding the yesterday question. If you reread the yesterday question, it was stated in the question that if you make a new company, the Cavaco, the number of shares will remain same. Each share of C company will be shifted to the each share of the Cava company. The statement was like this. I couldn't recall the exact statement, but it was given in the question that number of shares will remain same. So that's why we have taken 2000 shares in the Cava and 2000 shares in the C company. Okay, guys, please read the question. First of all, read the requirement. Estimate the financial impact of the director decision to delay the production. We are doing this question for the Black-Scholes option pricing model. It's an important question. You will learn that how to solve the question on the Excel. Estimate the financial impact of the director decision to delay the production and marketing of the game. The Black-Scholes option pricing model may be used where appropriate. All the relevant calculations should be shown. Briefly discuss the implication of the answer obtained in part A. MMC is considering whether to undertake the development of a new computer game based on an adventure film due to be released in 22 months. So you are thinking that you should launch a new game based on the film that is going to be released in 22 months. So you are planning to launch a new game. It is expected that game will be available to buy 2 months after the film release, by which time it will be possible to judge the popularity of the film with a high degree of certainty. However, at present, there is considerable uncertainty about whether the film and therefore the game is likely to be successful. Although MMC would pay for the exclusive right to develop and sell the game now, the directors are of the opinion that although MMC would pay for the exclusive right to develop and sell the game now, the directors are of the opinion that they should delay the decision. Remember, if there is a delay the decision of investment, if you are delaying the investment decision, that is call option. If you are delaying the investment decision, that is call option. Remember, the investment in future will be the call option. The abandonment, the sale in the future will be, the disposal in the future will be the put option. So you are delaying the investment decision, that is call option. And market the game until the film has been released and the game is available for sale. So release of film and the game availability means 24 months. That means 2 years. So you are delaying the investment decision till 2 years. MMC has forecast the following end of year cash flow for the 4-year sale period of game. Obviously, when you start the game after 2 years, then you will be able to realize these cash flows. MMC will spend 7 million at the start of each of the next 2 years to develop the game, the gaming platform, and to pay for the exclusive right to develop and sell the game. So you will spend 7 million in year 0, then 7 million in year 1 to develop the game, the gaming platform, and to pay for the exclusive right to develop and sell the game. So question is whether you launch the game or not. You will be developing the game, you will be developing the gaming platform, you will be paying for the exclusive right. But the question is whether you should launch the game or not. Following this, company will require 35 million for the production, distribution and marketing costs at the start of 4-year period of game. The question is, you are delaying this 35 million for 2 years. You are delaying this for 2 years, 35 million. If you invest that 35 million, then you will able to draw these cash flows. It can be assumed that all the costs and revenues include inflation. Cost of capital is 11%, risk-free rate is 3.5. MMC has estimated that likely volatility of the cash flow is at 30%. Likely volatility is 30%. That means standard deviation is 30%. So the question is, if you have the option to delay, what will be the benefit? So guys, let's solve it like simple NPV. Normal NPV without delay option. If there is no delay option, how can you solve the NPV? You will write the years. Zero, 1, 2, 3, 4, 5, 6, 7. If there is any. I think no 7. Cash flows. Okay. You are spending 7 million at each of the next 2 years. You are investing 7 million for each of the next 2 years at the start of the year. So 7 million here and 7 million here. Then you will invest 35 million for the launching of the game, and then you will be able to get these cash flows 25, 18, 25, 18, 10 and 5. 10 and 5. The discount factor is 11%. Discount factor is 11%. 1.11 raised to power minus 0. PV, present value 7. NPV is negative 2.96. Negative 2.96. So normal NPV or traditional NPV? Traditional NPV. Traditional NPV. This is traditional NPV, guys. No, we need only 6 years. We will be investing 7 million at the start of next 2 years. Start of next 2 years mean year 1 start is year 0. Year 2 start is 1. So this 7 million at the start of year 2, this 7 million at the start of year 1. We need 7 million for the next 2 years. 7 million at the start of the next 2 years. So what is the start of year 1? Year 0, right? What the start of year 2? Year 1. So that's why I have written 7 million here. And then all other cash flows are at the end of year, relevant year. Okay. At the year end, you will invest 35 million. Then you will get the series of cash flows. So that's why you need only 6 years. So guys, now the decision is option to delay. Option to delay. Which cost you are delaying, by the way? Please identify which cost are you delaying. You have the option to delay which cost. Out of all these figures, you have the option to delay which cost? 35 million. Excellent. 35 million. So if you are delaying, there is a question, if we need 7 million at the end of the next 2 year, then we should have 7 million year 1 year. Yes, you are right. Option to delay. We are delaying which cost? We are delaying 35 million. So here I am writing just for your information. We have the option to delay 35 million for 2 years. And which future cash flow we will get? Cash flows. Which future cash flow we will get? 25, 18, 10 and 5, right? So remember, we have to, whenever there is a question, we have to identify PA, PE, T, R and S. Remember? What is PA? PA is present value of all future cash flows after option expiry. You do not need to write this in the exam. I'm just writing for you people. You do not have to write this. Present value of all future cash flows after option expiry. Guys, when the option is expired. What is the date of the option? When the option is expiring. When the option is expiring. In this question, when the option is expiring, by the way. After how many years option is expiring? After 2 years. Option is just for 2 years. Guys, we are delaying the game decision for 2 years. So option is of 2 years. Option is of 2 years. Time is 2. Risk-free date is, let's fill the easy item first. Risk-free date is 3.5. Volatility is 30%. 0.035, 0.3. So PA is the present value of all future cash flow after option expiry. Guys, option is expired after 2 years. Option will expire after 2 years. So let's calculate the present value of all cash flows after 2 years. Let's calculate the present value of all cash flows after 2 years. Okay. You got the point, right? This is PA. And PE, what is PE? In call option future investment is PE. In call option future investment is PE. In exam, you do not have to write this explanation. In exam, you do not have to write all this. I was just writing just because of you people. Okay. So PE is 35. Okay. Now, what will be the PE in put option? In put option, PE will be future disposal proceed, future sale value. In put option, PA will be present value of all future cash flows after option expiry. And PE will be, put option mean right to sell. Put option mean right to sell. In put option, PE will be future disposal proceed. Future disposal proceed. Okay. In put option, PE will be future disposal, future inflow, future major inflow, the one-off inflow, right? So PA will be present value of cash flows after option expiry. PE will be future investment. T is simple, R is simple, S is simple. Now please open the formula. Now please open the formula of D1, D2 and call option. Please open the formula. Guys, never discount the PE. Formula will itself discount the PE. In Black-Scholes option pricing model, whether it is a real option or just the simple Black-Scholes option pricing model, you will never discount the PE. Right here. Never discount the PE. Why? Because the Black-Scholes formula itself take care of it. Okay. Okay, there is a question that it is written here. Please read the first paragraph. Please read the first paragraph of the question. Please read the first paragraph. Okay, got it, right? Now please open the formulas. This is the D1 formula, right? D1 formula. Log normal PA over PE plus, please look at this formula. I am going to apply this D1. So let's calculate the D1, guys. D1. Log normal, bracket start, PA over PE, bracket close, plus, this is the formula, log normal, bracket start PA over PE plus, bracket start R plus 0.5 in the formula into standard deviation square, bracket close, into time, into time t, t is 2, close the bracket, and divide it with s into t under root. S is 0.3 into t under root. T under root is SQRT t time 0.6167. 0.6167. That is D1. Please read the formula again. Formula is ln log normal, bracket start PA over PE plus bracket start R is the interest rate, plus 0.5 is in the formula, S is the standard deviation square, into T means time, divided by S is standard deviation, into T under root means square root, SQRT. So let's apply the formula. Let me apply it again. Is equal to, write ln, simple write ln, bracket start PA over PE, 38 over 35, bracket close, plus bracket start R is 0.035 plus 0.5 in the formula, into standard deviation square 0.3 square, 0.3 raised to power 2, into bracket close, into time t. Okay, now apply the bracket to the whole numerator, divided by bracket start S standard deviation into square root of t, that is SQRT, square root of t mean 2, close the bracket, it will be equal to 0.61. Yes, formula of D1 and D2 will be given. Formula of D1, D2 will be given. Now apply the D2. Just reread the D2 formula. D1 minus S into T under root. Please apply it with me, guys. Please apply it with me. Now apply the D2. What is D2? D2 is minus D1 minus SSS 0.3 into SQRT square root of time 0.19. That is D2. D1 and D2. Please calculate D1 and D2 with me. Yes, you can contact, but let me clear. Let me clear. Let me read. Okay, let me complete the figure. Let me complete the numerical. Then I will tell you that why it is a 2 year. Okay. Okay, guys. What is the next step? What is the next step? If anyone knows, next formula will be this. C is equal to C means call option. C means call option. Call option will be equal to PA. We know what is PA into ND1. We haven't calculated the ND1 minus PE into ND2. We haven't calculated the ND2 minus exponential minus RT. So let's calculate ND1 and ND2. It's very simple. You will save a lot of time here. ND1 and ND2. Guys, put is equal to and write norms dist. NORMS dist. Norms dist. Select D1. ND1 will be calculated. ND1 will be calculated. Norms dist. Right? NORMS DIST. Norms dist. Start bracket. Select D1. ND1. For ND2, write again NORMS DIST. Norms. Remember, norms dist. It is not like norm dist. Put the S between norms. Norms dist means normal distribution. It's not a rocket science, normal distribution. Bracket start D2. So guys, I have calculated ND1 and ND2. ND1 and ND2. Okay, now read the formula again. I need PA. I have calculated. If D1 is negative, if D2 is negative, norm dist will cover that. Don't worry about it. Excel will cover it. ACCA practice platform will cover it. Don't worry about it. By the way, I am applying only those formulas which are applicable in exam. Okay. Okay, guys. Now formula is PA. We know that ND1. We know that PE. We know that ND2. We know that. This the last exponential RT. This is also the application of Excel. You can do it. So let's calculate call value. Call value. PA into ND1. Okay, PA into ND1 minus PE into ND2 into exponential. You will write EXP. EXP RT minus RT minus RT. R is 0.035 into T is 2. 9.52 is the answer. 9.52 million is the answer. Call value. 9.52 is the answer. Again, let me again apply it. Guys, I need PA, I need ND1. I need PA, the first formula, I need ND1. Okay. I need PE, ND2 and exponential RT. There is no need to use the calculator. Simple, right? PA into ND1 minus PE into ND2 into, right, EXP exponential. Bracket start minus. Firstly, you will start the bracket, then you will put the minus. Why you are putting the minus sign? Because it's discounting. It's discounting. R into T. 9.5. 9.5. And how to calculate ND1? ND1 is simple, right? Norms, dist. Select D1. ND1. Yes, I am calculating E raised to power minus RT. That is simple. Exponential, bracket start minus RT. Call and put formula will be given in the exam. How to root 5, for example. When you take the under root, it is SQRT. SQRT. 5. This is under root of 5. E means exponential. EXP. E means EXP, exponential. Okay. $35 million will be incurred at the end of year 2. At the end of year 2. Okay. Now, let me read the question again, because some of you were thinking that it's a 4-year option. No. Look, MMC is considering whether to undertake the development of a new computer game based on an adventure film due to release in 22 months. It is expected that game will be available to buy 2 months after the film release, by which time it will be possible to judge the popularity of the film. So guys, film will be released after 22 months. Film will be released after 22 months. And after the 2 months of the film release, then you will launch the game. So how many months it will become? 2 years. It will become 2 years. So you are not starting the production of the game till the next 2 years, till the next 24 months. So it's a 2-year option, not a 5-year or 4-year option. After the 2 year, you will start the production. You will invest 35 million. So guys, after the 2 year, company will require 35 million for the production, distribution and marketing. Okay, it's a 2-year option. Okay, there is another question. 5 root of 10. You will write this. 5 into square root of 10. 15.81. Last paragraph. I think that was the problem I think that is just the problem of language. Following this, the company will require 35 million for production, distribution, and marketing costs at the start of the 4-year sale period. Start of the 4-year sale period. That means when you invest after 2 years, then there will be 4 years available for which you will get the cash flows. It was written like that. When you start the production of the game after 2 years, then there will be 4 years available for which you will produce the game and get the cash. Okay. So guys, I think now hopefully you will be able to solve the Black-Scholes option pricing model, right? So you are comfortable with the calculation, right? If you calculate the traditional NPV was 2.96 million. NPV was negative. That means you shouldn't start the project. But guys, you have the option to delay. What is that? You are not starting the production immediately. You have 2 years to start the production. In that 2 years, there is a volatility of 30%. There is a volatility of 30%. That means in next 2 years, if circumstances become favorable, maybe you will get more cash flows. If circumstances become favorable, if circumstances become moves in such a way that you will get higher cash flows, you will launch the game, you will get the benefit. For example, if after 2 years the release of first film become successful, what you will do? You will launch the game and you will get extraordinary cash flows. Maybe possible if after 2 years, when after the release of the film, you got to know that the film is not that popular, you will not launch the game. So if you consider this question in a traditional way, it's a loss-making project. But if somebody tells you that you are not investing 35 million now, you are investing 35 million in future. You're not investing 35 million now, you're investing 35 million after 2 years. So then you will realize that if we consider the worth of this delay option, we have full 2 years available. In that 2 years, if circumstances become favorable, we will launch the game and we will earn more profitable, more generous cash flows. Because cash flows are 30% volatile. 30% volatile means cash flow can change in the future. You will ask, sir, cash flow circumstances can become against you. Then what will happen? We will not launch the game. It's just the option. We will not invest that money. So that's why option has more worth than the traditional NPV. We are investing 35 million traditional NPV. Just there is a difference that in traditional NPV, we are not covering the worth of delaying investment. We are in traditional NPV, we are investing 35 million after 2 years. In traditional NPV, we are investing 35 million after 2 years. But we are not realizing that this 2 year time has a worth, because in these 2 years, if circumstance becomes favorable, we will launch the game with full extent. If circumstances become against us, we will not launch the game. So in traditional NPV, we do not think like that. In traditional NPV, we just calculate the present value of cash flows and calculate the answer. So it's a game of these 2 years. In these 2 years, if the new film popularity becomes wide, we will invest the game. Option is all about the volatility actually. If you are launching a new game after 2 years and cash flows are not volatile, believe me, call option will have a very low worth. Remember, among all the points, the major points by which option value will change is the time and the volatility. So if cash flows are not volatile, game, this delay option has no higher worth. Okay, guys, any other question? In tomorrow class, we will be covering. One question on the currency risk management and one question on the interest rate risk management. So please revise risk management before joining the tomorrow class. I will try to cover the maximum part of that. I will try to cover. Yes, in this case, we will accept the project because traditional NPV is 2.96. So option to delay is 9.52. Traditional NPV is 2.96 and the overall impact will be 6.55 million. So we should accept the project. We will be covering one latest question from the latest attempt and one question from some previous attempt. Interest rate risk management will be from the latest question and remaining risk management question will be from the previous attempt. One of the previous attempt. Thank you so much guys for joining in. I will be sharing this Excel file and the other files with you in the WhatsApp group. Okay. Why I have to deduct the NPV? Because if you do not consider the delay option, NPV is 2.96. If you consider the delayed option has a worth of 9.52. Without option, project has a worth of 2.96. So that's why overall worth is 6.55. If you consider it a simple project, NPV is 2.96 negative. If you consider the delay option has a worth of 9.52. So with delay option, total project NPV is negative. Total NPV is positive. Okay. How can you be the part of WhatsApp group? Let me share the WhatsApp link with you. Please wait. Okay, guys, see you tomorrow. Thank you so much, everyone. Take care. Goodbye.